Yeah, Scott, still going. That's our first look right here is crude oil. Something we talked about, and crude oil was really great. Obviously, anytime you get a level that's this clean right here, 51.65, we saw it coming. Um, that's a level you have to be patient for because when we marked that 51.65 is when we rolled over to the new end contract. So the day we did the rollover and we did the video for the rollover and showed, hey, this is how we roll over a contract, and how I start the analysis with the looking for the high volume nodes, the low volume nodes. We mark them in the daily chart. So that level has been on the board for at least a couple of weeks for us. And we just had to wait. And then there it is, as clean as day, 2 ticks off of it. Fails on a 2-tick, higher high, retest right on it, and then lower high, and then all of a sudden it can't hold anymore, and boom. And then we were looking for a first move into the previous month's high at 50.21, and we got 2 ticks off of it. Just great move. Price pulled back, and right here is when the third standard deviation bands started to go more flat. So when you looked at the third standard, yesterday it was very vertical up until here it started to go more flat, and we were thinking that price could find a low and bounce to a high and just trade and chop most of the day. And that's kind of what happened here. There was one point here where it tried to hold or break above VWAP here, and we knew that if it made a 1 tick higher high or maybe a lower high, that could be a failure. And so right there, it kind of failed and just went sideways. But we knew that there was more downside to be had because there's an HVN below. That HVN is 49.36. That's a CLVN, or CHVN rather. And going from rejection up here, the expectation would be that price would come back to acceptance. And that's what we've seen here. So 49.36 is the HVN. If price is going to see rejection here, the market wants to return to where the bulk of the trading has transacted. That's where the HVN is. That's where everybody likes to trade it based off the composite chart. And that's kind of what happened here. Just very nice so far, but I think there's still more downside ahead. One thing I mentioned yesterday was that you want to check out where the overnight pivot is, because price is at or above it likely to be offered in a downtrending market. And since yesterday's rejection, and we were expecting a lower overnight pivot today, and we got it. Here's the overnight pivot. It printed right away, offered above it, came back, offered right at it, back again, and we're back below it. So just an important level already so far, the overnight pivot. And here we are. You're right. We're sitting right here. We're sitting right here off the S3. I think that's a good question, Scott. 49.36, and then you have the previous month's close price of 49.10. I think the 49.10 probably has a better shot to see a bounce than value, because if you're going to go from rejection here, then I think if price drops here, it's probably going to go through it and find a range around it. And so the level below it, the most important key level below it, is going to be the previous month's close. So I think that one has a better shot to see in the first test bounce. But we'll see, because there's going to be perhaps some targets there, right? So if you're sold here, then perhaps there's some buy stops here to cover at value, and that could lead to at least a minor short-term blip, but I think the bigger bounce may come here off of the previous month's close. At least that's what I'm thinking right now. But very nice the way this is played out. Just boom, up, back, and now what we talked about before was in this zone, even perhaps lower, but you'd like to see it higher. You want to see this thing keep a good slope here. I think here, if there's rejection below the previous month's close here, I think that could be a great buying opportunity for the squeeze into 53.40. So 53.40, let me just bring it up instead right here. There's 53.40. And that's the midpoint of that major impulse range. Oh, very nice though. Very nice off that overnight pivot. Awesome move. That's fantastic. Um, we've had a very nice trend in this thing. Very, very nice. Um, Here's the previous key range we're talking about. We're well above that range. Here's the low, 47.61. We held above it, held above the previous month's high before that. The mid pivot, the LVN, there's a whole lot of confluence of support there, and we've continued to push higher here. The next phase up is going to be the midpoint of the range, and that could be the next spot where we see resistance. So, you know, if price gets into this level, now that's the prior support here and the mid pivot of that key range, the midpoint. So I think on this next bounce, you know, it could be here, up. This is about the spot where you may see a pullback off of 53.40 and then perhaps challenge this LVN from above, and then that can get you into 55s. So if I'm visualizing how this thing could play out here over the next few weeks, it could look like this. That's the bull scenario. That's your best case bull scenario that we'll be looking for. Where this fails is if it starts to go offered through 49.36 and closes below the previous month's close. That would be significant. That would be a significant event. And then a retest from below could be a selling opportunity to challenge LVN and perhaps go to the lower HVN below. So that's what it would look like if it would fail, at least in my opinion. That would be a standard failure of how this thing could play out. And now we're back to kind of the HVN here that we've been trading around this entire time, right? And that makes a lot of sense as well to me. So not any of the scenarios are not right or wrong. There's no right or wrong scenario. It's just what is. What is the market going to do? What is the market going to do? And we can just watch it. Watch it and study the behavior at these key levels. We know this is value, so we know that if price goes offered through value, it's going to mean something. Now, price can drop below it because we know that it's going to perhaps come into this level here, but they need to close above here. You know, price needs to be able to pop back above that level and show day over day that bulls are defending below the previous close, just like they did here, right? On this move up, they defended below it and boom. So we'll see how this plays out, but those are a couple of scenarios that I'll be looking for the next phase of, over the next month, right? To 2 to 3 weeks. We'll see how it plays out. But this is looking nice. So there should be some more downside here ahead. Right now we've seen a push back above the S3. S3 is going a little more flat right now, so we could actually see a bounce back up toward the overnight pivot and ETH VWAP. Let's see here. We got GC. Yeah. This has been a nice bounce. This has been nice. Something that I mentioned in the pre-market is what we talked about yesterday in the trading room, which was if this thing closes here above 69.5, then today, pre-market, overnight, look to defend this high, right? You bring it over like that, and then there it is. And then that would get you to the new high, perhaps to the 100%, right? That's exactly what we talked about yesterday. When you get into a really great trending market, you expect those types of things to play out. That's your first idea, and that's your best idea for an entry. Even if it's a short-term entry, that's it. It can just be that, and that's a day trade. Because this is what I built programs for back in the day, right? It was just to find that event. So if I saw that this thing was pushing higher like this, and it's in a nice trending market where you're getting higher highs day over day and higher lows day over day, that's an uptrend if you drill down into the intraday chart. And so when you get these big thrusting bars like this through a prior high, the initial idea is to defend that point right there and hold it. So I built these to hold for an entire day, right? You defend that level and then you hold all day long, and you just hold it as a day trade. That was the classic form of a day trade, right? You just buy it at that level and you hold it till the close. That's just a classic. And then of course, you can do so many variations of that, scaling along the way. You know, if the primary idea is to defend here and push to a new high, perhaps 50% beyond the prior high, then that's your primary target. So the trade could be done before we even get to, you know, lunch. And it is already for all intents and purposes. So I would build just to that one tendency right there. And that's how I was able to boom, boom, and get a good piece, and that's it, right? So just very, very nice the way that came off, right off that level. That's the prior high. You go thrusting through it. That's the defense. That's just beautiful. I love it. So I think in this case we still have more upside. As was mentioned yesterday, there was that LVN I think Lee mentioned, or HVN I think Lee mentioned, which is right here. And that's a nice target as well for next week as this thing continues. The primary idea was just that we got to this bulky part of the profile, and that was between 68 and 75 for the most part, and we got that too. So looking at the ES and NQ, there's still more downside here. Again, I may be watching for signs that this thing could bounce. Here's the previous month's close, at least on the U contract, 85.75. That's going to be a level to watch. It's also very close to that 125% expansion. You can see right here that on the U contract, we're now more volume, 380 versus 311 on the M. And then over here, this is the U contract, 47 versus 30. So that's good to see that at least the volume's over now. Here's the ES. Yesterday, what we were looking at was how price was sitting on top of the previous week's high, which on the current U contract now, it's 2097s, and that is a 9-point drop we mentioned yesterday from the 2106s, so it was 9 points lower. So that also drops composite value 9 points lower from 61 to 52, right? So everything kind of shifts downward 9 points. One thing we were talking about is how bulls were defending the previous week's high here, here, and here, 3 days running, but they weren't getting paid. So that implied that we could see a sell-off. And what we mentioned yesterday was that we would likely see a big red bar like this, and I actually drew it out and shaded it in. And I said that leaves an opening for a retest of this level in the upcoming week, and that can get us down back to the top of micro composite value and also back to composite value. So that's the path forward right now. That's the path forward if this day remains bearish and closes, you know, somewhere near here. You know, if we come back and price closes back up here and leaves a tail, that's going to tell us something different, right? So we have to, you know, this play from here downward, that's for the upcoming day, depending upon how today plays out. Today is a bearish day, so the idea would be to sell rallies. So if price rallies, you're looking to defend it. That's it. So that's the idea right here. But this is exactly what we were talking about yesterday. And it also goes back to kind of what we taught in Masters, which is visualizing the trade. Before you pull the trigger, there's so many steps that go into that trade first. And part of visualization is just trying to see what could happen. And I actually drew it out exactly like this. So we're seeing that already play out. We've seen, you know, price fail to hold above the high. And now that could lead us all the way back across this range. All the way. So here's these lows, 2020 now. I mean, it could bring us all the way back into rejection. And given that this thing has been expanding, we could actually get down below these lows and perhaps test this little minor LVN at 2,000 or near 2,000. And that's when we could perhaps bring it back up and across the range. So I could see that playing out on a longer term move as well. So those are just a few thoughts there. Wow. We saw it yesterday pushing higher. And that the bonds, that's unbelievable right there. Let's see. Oh, by the way, I was looking at Tesla. Here's a key range we drew out on it before. There it is. Here's the midpoint. They try to defend the midpoint, fail here, go offered through it, rounded bottom below that low, and then it holds and bounces back toward the middle. Just so beautiful. It's like a symphony. A symphony of movement off of our key ranges. So beautiful. I love it. But this one, ZB, unbelievable here. This is an unbelievable move. This is the first time we're getting up here, obviously, since that rejection day so long ago. And that's kind of a point here that you'd like to make a note of, is that when we see a real rejection day in the markets, we know. And price has never come back to this rejection day since until now. I mean, look how long it's been. We saw that at the beginning of February, and here we are 4 months later, just now coming there. That's significant. That's when you really want to know what type of rejection day is it. Sometimes there's minor rejections, but when you know there's a significant rejection day, the market's going to show you. And man, it's just now coming back to that level. That's crazy. Now we have to see, are they going to reject again, or is this thing breaking? Because that would be a huge event here if this were actually to break and continue well beyond those highs. It's a good point too, this trading range here that we marked out was great for so many moves, and not just small moves. I mean, these were big, beautiful moves with really, really precise areas of resistance. So when we broke back below here, we noticed the absorption signature that was forming off the 67s, and we were looking for a move back across the range into 130 or 160.30 and also the previous month's high. And so we were looking for that move. And then once you see it respond here, you know exactly where it's going, and all of a sudden you see the trading range develop. And this trading range paid. At one point, it's going to stop paying. So we knew that even in this case, we probably thought there was going to be more sideways first before we saw a reversal. So we knew that this wasn't even a great spot to be selling just yet. But at some point, you're going to get expansion, right? This beautifulness doesn't last forever. But the levels still remain nonetheless. The levels still remain nonetheless, right? So if this thing continues nicely higher, I mean, coming back to 167 from above is going to be very interesting, because bulls are going to look to defend there and squeeze. Otherwise, you come right back across the D-shaped pattern. So again, we know exactly what we're looking for. Now, if you look here, this is an expansion day. Look at the midpoint of that day, right at the previous high. It's almost like clockwork sometimes. On a true expansion day, you're going to see at least the midpoint be at least at that high, if not beyond it, on a true expansion day. And now that opens the possibility for the upcoming day on the same type of pattern we just talked about with gold. It opens the potential for that again. You would defend here, which is currently 160.08, and look to squeeze it to a new high. That's your day trade, with the potential to see more on a swing basis. So this is the same pattern that's kind of building out that just happened in gold. We could see it happen here too, at least short term. But again, it all depends on price closing where it is, near where it is. If it were to leave a huge shadow here and close back below this point, that's a rejection. So, it all depends on the bar ending the day like this, which, of course, we still have to be patient to see if that happens. Okay, let's see here on the NQ, a higher time frame. Man, this is nice. We've seen some great moves here lately. Great moves. Right off of some of our analysis, which is I love to see. This is that rejection day high. Beyond these highs, we closed nicely lower. We were looking for a retest, right? 45.30. We were looking for an absorption signature to form, and we identified the 45.30 to 45.35 zone, at least on the M contract, and that played out very nicely. We were expecting the same behavior in the ES. It did not give us that behavior, but the NQ did. And what we were looking for, again, was the expanding range to come into effect. Rejected above these highs, so it's going to come out and take out prices below this low, and we have. So for all intents and purposes, again, from the rejection day, from our absorption signature, this is a pre-market report. So everybody got that one. Pre-market report said that's the level to defend for new lows below this low. So here we are heading into 25 minutes into RTH on Friday, and we got that move. It coincides very nicely with, you know, the Pitbull Thursday, Friday low before expiration, right? So now it's about identifying where this thing's going to find support. Here's an LVN we can look for. Here's an HVN. This is also the top of the key range. So I could see this thing coming into here and trying to bounce. Or I could see it even going as low as here if that level fails and still being bullish enough to bounce. That was our primary idea to begin with because of the distributions, the price distributions here. You know, anytime you see price create a distribution here and then breaks down below it and creates a complete distribution below this, in a clean market structure, ideally you would break down and do it again. Instead, you broke above it. And so when you break above it, statistically speaking, you auction back across those ranges. And since this was extreme rejection, I wasn't really calling for a move way up there. I was just saying 45.50. Oh, 45.50, which is here. So we got pretty close. And then I was thinking, okay, well, once you do that, the next idea is usually you come across the range and seal this as support, and then you work your way back up, right? So that was the primary idea before this expansion day even occurred. So I said, watch 4,400. So before this day was even here, looking to the left, we were talking about it here. If price breaks this narrow range to the upside, you would do that. And if so, then you'd probably do this. So again, that's part of the visualization that we talked about back in May, before the expansion day. So once we saw the expansion day, we knew exactly what to target. And then we knew right where about price would likely start to see some weakness, and that's why we were looking for a rejection day up here. And when we saw it, we knew the absorption signature, and we knew we should be looking for new lows. So that kind of brings us full circle with the analysis here from the last month or two and how this thing's played out. It's been very, very nice. And that's why I say I love when things play out beautifully off our levels, because it just validates everything we're doing, and it makes trading much more stress-free at times, because you have a clear path for what you know price should do. And if price deviates from that pattern, then, you know, we know what to expect in the opposite course, right? But very, very nice. I love it. Well, you know, what's cool, you know, many of you have contributed to that analysis, which I really, really love. I mean, here we are for the first, not even through our first full 6 months in this room together this time around, and so many of you have awesomely contributed to a lot of that analysis, and that's been fantastic to have so many of you, you know, gravitating toward this approach and incorporating it with your skill sets. You know, all of you bringing your own skill set to this thing. I think it makes for a rich room. So thank you so much. This is a lot of fun when things play out nicely. Oh, that's awesome. That's awesome to hear. I love that, Southpaw. Thank you for that. Sometimes it offers great opportunities to talk about these things. Other times, especially in summer, it could be kind of boring. You know, we've seen a couple choppy days, but that gives us room to talk about something different. I always say, you know, while one market may be quiet, there's something else that's moving. So we jump over to stocks or do something different, but I enjoy it. As long as you all are enjoying it, I'll hang out.